This is Fintech Chatter, presented by Tier 1 People, leaders in Fintech executive search. And I'm your host, Dexter Cousins. Today's guest is Stephen Smyth, Chief International Officer from Clearscore. With over 12 million users, Clearscore is the #1 marketplace to access your financial data, including credit reports and credit scores, and open banking data. Before we get into today's show, just want to let you know that we're really busy here at Tier 1 People, working on a number of CTO positions and senior roles across product, marketing, sales, and operations. If you're thinking about your next move, please drop us a note, info@tier1people.com. Stephen, welcome to the show.
Hi, Dexter. Thanks for having me on.
You're welcome. Thanks for coming on. I know we've talked about doing this for, I think, about a year now. So it's nice to have you on. I'm pretty familiar with Clearscore, given the work that we do with UK Fintech, the UK Oz Fintech Bridge. But would you like to tell our listeners a little bit more about Clearscore and what you do?
Yeah, absolutely. So Clearscore is originated in the UK, but it's also in South Africa and here in Australia. And many people think of it as a free credit score and report app, which is part of what we do. But the reason why we do that is we get people access to their credit score and report so we can help them save money. And our real insight has been from many years working in financial services is that most people find credit, mortgages, car loans, credit cards, complicated and difficult. And what we try and do is simplify that. And we make it easy for people to save money and find better deals. But by helping people access their credit score and report, we can do that in a much more targeted way by giving them offers that are really relevant to their financial situation.
Cool. So can you talk a little bit more about the origins of the business and kind of how it all came about?
Yeah, so a lot of people in our business used to work at a company called Capital One. So our chairman founded Capital One in the US. It's a credit card company. Justin Bassini, the CEOs in credit cards. He worked at Capital One with me as well as a marketing background. And so we really knew the industry from the lender's perspective. And back in 2015, we launched in the UK because we really saw the opportunity that we could both help consumers get access to better deals, but we also knew some of the lenders were facing issues finding the right customers. So we were able to build this application that really helped create a marketplace that was really efficient, both for lenders and users.
Cool. Now, and you mentioned there launching in 2015. How's the business evolved since you've been involved, Stephen?
Well, it really has taken off like a rocket since that 2015. I joined in 2017 and the UK was already storming.
Yeah.
And the role that I came in to help Justin was expand the business overseas. So we launched in South Africa in 2017 and India in 2018 and then Australia last year at the height of COVID.
How did that go, launching at the height of COVID?
It was stressful. And I think there's two sides to it though, because with the uncertainty of COVID, it was just really hard to know what was the right call to make. Do we invest? Do we hunker down? But there's also a flip side to crises, and I've also lived through the global financial crisis in the credit card space. That sometimes a crisis just really helps band people together. You really focus as a team on what's important, and that kind of clarity of what's important and prioritizing the most important things can really help a business do a lot better. And so I really felt that although it was stressful, I think we came out a lot stronger because of it.
Yeah. What were some of the lessons that you kind of picked up going through, as a leader, and continuing to go through it? It's not like we're through it, right? It's like where it feels like we're back right in the midst of it. What have been some of the kind of leadership lessons that you've picked up through this?
Yeah, I think leadership in a crisis is super challenging because you want to do as many things as you can to make the business successful. And You want to look after your people, but it's also a time where it's even more important than it is in everyday business to just focus on the key things that are really going to make a difference. And that might mean instead of doing 50 things that could work, you spend extra time thinking really hard about the one thing that is going to work in your business. And I think the other component, which is the much harder one, is, because I think this is very challenging even for all business at all stages, is when to say this isn't working, we've got to stop that and focus our efforts elsewhere. And that's super hard. That might mean closing down businesses or opportunities that you're really invested in. But I think the crisis always helps you sort of show, well, that's for the long-term health of the business. Some of those tough calls are actually going to be much better for the long term.
Yeah. I remember putting a post up on LinkedIn, maybe it's a couple of months ago, where I just put some of my learnings through, again, GFC and what I kind of seen happen there, and how I then applied that in my own business as we hit COVID. And the first thing that I put was that pivots are dangerous because they take you away from what you really focus on and what your customers know you for. And there was uproar about it, and everybody said, "Oh, pivots, Netflix pivot." And it's like, but for the everyday kind of business and small business, this kind of obsession with a pivot, like it's the path to success and it's the right thing to do, and it comes without risk, or it isn't dangerous. I think it's a dangerous notion in itself.
It's such a good topic. It's such a hard call, because I think as an entrepreneur, you've got to be optimistic and believe in what you're doing and just get better and better, because I think execution in startups is a critical thing. That it's often not the fancy differentiation. It's just doing what the consumer's basic ask of the service is better than your competitors. So the pivot is like a major change. I think the only reason, I guess the learning I've had on that is sometimes you have to really change course. You can help yourself by saying, well, in advance, what do I expect my key results to be? And if I'm missing that, I have to put in a meeting with the board or with the management team and say, I'm missing my targets. Do we change strategy, or do we keep on going deeper? And sometimes having those sense checks in your processes can really help you be a bit more objective on what is always a very hard call.
Now, the other thing I think people often confuse as well is evolution of a product or a business as a pivot. A good example would be Clearscore. You started out with a web application, and now you've become kind of mobile first. What's been the kind of driver and the move towards that?
Yeah, and I think that happened organically in, I think, one of the better ways that these things can happen, because it came from sort of user pull. So what we launched the app because we thought, well, that's a good thing to do. We should do that. But quite quickly, we just saw that users much preferred the app. It's easier to authenticate yourself and log in. It's easier to use it. And so we found that the satisfaction with using the app was just much higher. And so it just encouraged us to sort of go in deeper into that way. And, we've now found that that's in a new markets like Australia, that's our primary way that people are using the app. And so although we've been later here in Australia than some of the original free credit score providers, we've got the highest active base on a monthly basis from the app. And I think that's really works well for that kind of user.
Now we're moving into kind of CDR, open banking territory. We're a year in now here in Australia, nearly 3 years in the UK. What kind of lessons have you been able to pick up from Clearscore in the UK that you think you can now apply here in Australia?
Yeah, this is an area where I just am a big believer in Australia. I think there's a real opportunity in Australia for us to create leadership around open banking. Because my role, I kind of see what's going on in the US, in the UK, and other jurisdictions, some of which have an advanced regime, some of which don't. But the thing I'd say about Australia, and I'll come back to the UK point, but because of the way the consumer regulations are here in Australia around lending, lenders are obliged to check and verify your income and expenses. It's part of our responsible lending. But what that has meant is that I've seen a lot more lenders here in Australia than in the UK who were already getting access to income and expense. And that could have been they wanted to see your bank statement in a branch, or they wanted to screen scrape it, or different ways in. But I think it's much more built into our way of lending here in Australia that people want to look at that data. And so the ecosystem, when I compare it to the UK, even though it's not fully evolved into where CDR and open banking might be in the end state, I think the sort of consumer willingness to give this data, they're used to it, and the bank's willingness to use it is far advanced from the UK. So I think that's fascinating. What you're seeing in the UK is a bit different, where people lend primarily on your credit report and credit score data. And so open banking is like an extra thing that we're really starting to see with our lenders, where they use it to make those decisions better. Whereas I think here we can almost make it's the primary way in which you give lending decisions.
Now, talking about lending, there's constant noise around buy now, pay later kind of regulation, whether it be buy now, pay later will take over credit cards. We've seen Apple Pay, move to with Goldman Sachs and the Apple Card move to kind of paying for. PayPal move to paying for as well. What's the view of Clearscore? Because I believe you've done some kind of research around buy now, pay later with your user base and kind of come up with some interesting kind of discoveries.
Yeah, I love this area, buy now, pay later. I mean, it's sort of blown up, hasn't it, here in Australia? Yeah. It's with Afterpays and like so many good companies. I feel like you and I are probably the only two people left in Australia who haven't launched a buy now, pay later already. So I'm kind of late to the party. But I think what's fascinating is when we talk to users about their experiences, at the heart of buy now, pay later, it's filling a real need here for many Australians right now. I had a chat with one of our users called Holly up in the Gold Coast. She'd lost all her income because of COVID. She ran an events business. She's a single parent, 3 kids, and that 1 week she's not getting any income. The fridge breaks and the TV breaks.
Yeah,
and she wasn't sophisticated financially, but she found buy now, pay later. Bought those things, paid off, over the next 8 weeks, and is a big convert. He uses 3 different buy now, pay laters, buys ahead when there's offers, and it's working super, super well for her. So I love that about buy now, pay later. But the other thing we're seeing on this is buy now, pay later is a bit of a risk because it's unregulated. It's not regulated in the same way that other consumer credit businesses are. And so what we've seen over the last 6 months, because we survey users regularly, quantitatively, is there's about 83% more people missing payments on their buy now, pay later. So it's about a third of people say they've missed payments on their buy now, pay later. And I think there's a potential thing going on here where, because you can get lots of buy now, pay later accounts open very quickly, and there's lots and lots of offerings, in the space of this podcast, you could pretty much sign up to 8 buy now, pay later companies and start buying stuff. And some people are very conscientious, like that lady I talked about, but some people a bit less sophisticated, or they might end up getting themselves into trouble because they can't really predict how much they've racked up and can't pay it back.
Yeah.
I think that's an area that we have to look at in terms of protecting users. But I don't want to draw too much of it as a negative. I think part of the flip side is that the reason why it's benefiting so many users is because consumer regulation has also prevented competition in this area.
Yeah.
And a lot of people like Holly couldn't get access to credit because they just lost their income. So buy now, pay later is filling a gap.
Yeah. What do you see as the solution? Does kind of CDR and open banking have a role to play here rather than, say, regulators?
I think regulations have to change in Australia if you really want to solve this. And the reason is as follows, that you can have all the data in the world, but if the regulation suggests you can't lend to someone who has no income right now, almost under any circumstance, then that person can't get access to credit.
Yeah.
And so this is, I think, what's quite interesting relative to other markets like the UK and US, where it's more based on your credit history. So if you, Dexter, can prove to me you've always paid your money back, you're very conscientious, we can lend to you in this time. And that doesn't mean you always lend to people who've just lost their job or anything, but it's just, I feel we've got a quite rigid structure in the way that we interpret responsible lending here in Australia. If you don't make that a bit more flexible, it's going to make it very hard to get choice for certain types of consumers.
Yeah, I think, look, the frustration that I've got with it, Stephen, is, successful business owner with a business for 5 years, and having recently gone through the process of buying a house, is just the amount of paperwork that I had to provide to the bank that I've banked with for 10 years, right? And it's and I kind of look at myself and think, based on the kind of credit, the current credit rules, I'm seen as a bigger risk as somebody who's spent 30 years at one of the big four banks and is likely to kind of find themselves out of a job at some point in the next few years. And you debate whether they're going to find something else, right, because of their skills and how relevant or irrelevant they may be, as we move into this very, very different world and, kind of different demands that we've got on people. I think the other thing as well that kind of strikes me is that, if you look, and this just isn't COVID, but I think we're seeing a big shift in how people work, or don't work. And so you're kind of going to go through these periods where you're not going to have revenue, you're not going to have income, but then you'll have a period, 6, 12 months where you're making a lot of money, and then you can take breaks. So I think it's a really, as you said, a really kind of, if we're going to apply the old world to this new world, or the old world regulations to this new world, it's not going to work.
Yeah, I feel quite strongly about this one. I think we're technology first, half our business are engineers, right? And I think we can make, with open banking and good tech and apps, great solutions in Australia for maybe 40% of people who are salaried. All the digital stuff is there to make good decisions. But I think there's going to be a lot of people self-employed or irregular income who are left behind unless we also think about how we create better regulations to support lenders to fill gaps in that space.
And I think Australia is actually, again, when you look at the number of self-employed people, I think it's something like 2 million small businesses.
Yeah,
that's a lot. That's a lot of small business owners, right? Who, kind of might be struggling right now, and don't have income. And how we've seen this, whether it's in business lending, where I think that's the other area. Buy now, pay late, and business lending. 2 areas where there's just people are massively underserved because of the system that we've got around credit decisioning.
Yeah, I think there's got to be big upside for the economy and job creation in getting this stuff right. And I'm not saying it's an easy job being a regulator. I've got friends who do that, but it's balancing different types of consumer harm and getting the balance right to give the biggest upside. Yeah.
Well, look, I mean, as we've seen with anything, whether it's gambling or alcohol or anything, where you get a small component of users who have addiction problems, it often feels like the regulations are all set up to protect that small minority versus actually the greater good of society.
Yeah, and I think it's important to be compassionate. Yeah, that's why I like talking to people rather than just seeing the numbers, because some people's stories are quite, they really motivate you in a way that just numbers on a spreadsheet don't.
Absolutely. Now, going back to kind of the Clearscore business, it's been a pretty kind of, as you said, wild ride, and there's been lots going on. Where's the business at now in terms of people and kind of funding round?
Yeah, it's really at its most exciting phase. So we've built a good core business, but we also had an investment round recently. Invest Partners came in with a 200 million round, so a really substantial round, some of which was primary and some of which was secondary, sort of taking some shares from existing shareholders. But what that has really helped us think about is, how do we accelerate? So we've been profitable as a business and self-funding our growth, which is a real luxury to be in that space. But when you get someone who comes along and wants you to drive greater growth, that's really exciting as well. So we're in the phase now of, well, what can we do to build better tech solutions in existing markets? Can we do new product innovations? Can we do new countries? And that's a fantastic phase to be in.
And in terms of kind of, I guess, the size of the organization now, number of people, how many people you got globally?
They're still growing, just over 200. So about half of that's engineers split across the 3 locations. Yeah. We're quite small in the new countries compared to that, but overall 200.
So, and how many people have you got here in Oz?
10.
Wow.
So we're still a small startup phase. Yeah. It's a fun phase.
Yeah, so you must be a very busy man then.
Yeah, a good busy. I think, I don't know if you've heard this, but when people say they're busy, sometimes you kind of wonder, what they're trying to say by that? I think it's it's good to be busy. I think it comes back to make choices, get on with the things that are going to have biggest impact that you enjoy doing most.
So obviously the kind of funding round gives you a big, I guess, one, that kind of boost, two, the kind of more runway, but then I guess three kind of makes you a bit more attractive to talent as well, where some of those kind of lingering doubts about, hey, they're gonna have enough capital there, get squashed, and all of a sudden you become like the hot thing in the market. What's been your approach to actually getting this to 10? Because that's getting from 1 to 10 is probably the most difficult part for any country manager in selling that vision, often to a business that nobody really knows about, where there's kind of high risk, and you got to, if anything, I mean, Stephen, you got to hire the very, very best talent, because there's just, there's nowhere for them to go. There's nowhere to hide. They're not going to have the support. They're going to have to be highly kind of self-sufficient and capable. How have you gone about attracting those people?
Yeah, I think finding the right team is absolutely one of the best things about growing a business from a small team. And it's really hard. Like you say, you don't necessarily have the money to pay off banks. You don't have brand recognition. There's a lot of uncertainty. And so at one level, you could think you're disadvantaged. But I think there are a lot of people out there who just relish that challenge. Like I found some people who turned down an offer from a big bank with 30% more pay because they want to be in a small company that's doing something interesting. So I wouldn't lose heart that because you're disadvantaged, that it doesn't have its advantages as well. I think the second thing I'd say is there are a few key hires in that early stage which really transform your likelihood of success. Many startups or small businesses or international businesses fail because they don't have people with some critical knowledge. And so you need to hunt those people down. And I spent a lot of time here in Australia trying to find a few key people who really knew the media landscape, the consumer credit landscape. And without those people, I don't think we'd have had the success we've had so far. Yeah. So you've really got to find a combination of good people, but also search for people with that attitude that they're really up for that sort of startup feel.
Yeah, I mean, that's kind of one of the frustrations that I get, right, is that we just kind of get these hiring myths put out there the whole time where, I hire on potential. And, I'd say, well, that's great in some instances, but in others, you really do need to bring in, the subject matter expertise and the IP and the networks and the knowledge and the skills and the ability and the experience of having put it all together as well. And I think one of the mistakes that we often see people do when they go and start something up is, they go and hire 3 or 4 people for the cost of what it would take to get that one right person who, they might be more expensive, but they actually are going to deliver the result that you're looking for.
That's such a key point, Dexter. I think that someone was saying just in a presentation just the other day, like in a scale-up presentation, it's like, don't underestimate how one person can transform the knowledge of the organization and its capability.
Absolutely. What are some of the kind of, I guess, you taught there, you've been able to attract people, but what do you think are some of the things about Clearscore, the culture, et cetera, that keeps people there? Because, it's one thing to hire them. It's another to kind of keep great talent in the business.
Yeah, and I'm super biased on this, obviously, but I spent a long time trying to find a company like Clearscore because I think it's very rare to find a company which has fantastic prospects, like its business has got strong unit economics and growth potential, but also is a really good culture for people. And I think if you get those two things right, I think you can create a great environment. And what I mean by the culture that attracts people, I think there are very strong aspects around excellence in what we're trying to attract people on. Like if you're an engineer, we do the latest tech stacks, the latest languages. We give people opportunities to be at the cutting edge of what's going on in the tech world. I think that helps recruit star talent. And I think that's also true in marketing. But when you're in as well, how we manage people, I think we talked about leadership before, but I think the leadership that I like to see in people at all levels of the organization is this willingness to have difficult conversations, to give feedback, to help people by being constructive at times. And so I think this combination of striving for excellence while also just really being honest with each other, but in a way which is trying to help you as a team. We talk about trying to achieve peak performance as a team, but you can only do that if you're really investing time to think about how can this person get better and how can I give them some feedback for that. That really, I really love that when we see that happening.
Yeah, and how have you gone about doing that? Yeah, it's great. It's great. It's great to be able to do that when you got 10 people in a room and everybody's kind of in it together. But as we've found out in this last 18 months, it's not very often you can get 10 people in a room to build something now, and you're kind of having people dispersed, and you're getting Zoom calls and not everybody's on the Zoom call, and you can't, you're just not there to kind of pick up people's mood. How have you found you've kind of maintained or kind of changed the culture to ensure that you're still, kind of hitting goals and being productive?
Yeah.
And in fact, I'm going to change that. Not being productive, because I think everybody now believes that they're being productive because they're not sitting on a bus going to work and they're working instead. But we're here and kind of the results ain't kind of what people are wanting to see. So how have you kind of maintained that effectiveness and kind of precision and kind of deliberate nature of you have to have around building something?
Yeah, there's an efficiency angle to this. There's a social connection and there's creativity. And I think the efficiency angle has been that in well-structured work and, like most engineering companies, tickets, grooming, kind of figuring out what we need to build, all of that stuff when things are well-defined is actually more efficient since we've moved to Zoom or working from home. I think that will continue. And I think a lot of companies see that. That's a big tick. I think that's why we won't go back to 5 days on buses getting into the office. I think the social side is a tricky one, right? Like, I don't know if about you, but I'm sort of sick of sort of Zoom quizzes and things like this. Certain types of social activity that just sort of don't work as well as being in person. But not all of it. Like when I was saying about that feedback and being clear and honest with people, that one-to-one you can do well. You can give good sessions with people, and just like if you're having a phone with friends back home, that's still really possible. But it's the creating that social connectivity in a team environment and across teams is a real challenge. So I think, we're going to have to find ways to do that. And I think there are interesting new ways to do that. It's not just about going back the old way. I think the hardest area though is creativity. Like that serendipitous sort of coffee chat that you have, which just makes you realize there's a connection in common that opens a business opportunity. And I think that's why we've got to get basically back in the office when we can to make that sort of stuff happen.
It cracks me up, right? You mentioned there about the Zoom stuff, and I remember I was on a kind of a panel, and it was all HR and how we've moved to remote. And there was somebody on there who was talking about how they would do spelling bees, and their staff loved it. And I started to laugh, right, because the company that they were from, their top talent had been reaching out to me saying, get me out of here. They've got us doing stupid stuff like spelling bees. My boss is dressed as a pharaoh on a Zoom call. I don't know what's going on.
I think you've got to have an environment for honesty, right? Like, I think what I feel sad for people like that, and I even worry about it, in all cultures that I've worked in is, will someone tell you that?
Well, that's it. We've passed surveys around and everybody says they love it. And it's like, because they're scared of losing their job. So they're going to tell you whatever you want to hear on the survey. It's crazy, mate. But I think I love the point that you make there about the creativity part, because I think that's really where we're seeing, leaders are struggling as how do we get that right? How we do that remote, because it is something that it's just accidental. I mean, every artist that I've spoken to, a creative person, you talk about their best work and I say, well, I'll just spend hours and hours and hours in the studio, and that was just an accident. But it was kind of, it was because they'd spent hours and hours and hours and hours doing something that then the kind of, the serendipity happened of, hey, it was an accident, but it was a really great one.
Yeah, I think the only one thing I'd maybe give a tip that I try and do now that's sort of helping me is you've just got to put in the effort to spend time putting in meetings with people you don't normally speak to, or reaching out to people across the industry. And it's a lot more forced, right? You have to get in the diary and you have to sort of plan it a bit more. It doesn't just happen by chance. But some of the best meetings I've had over the last week have been with a guy in Canada doing a startup, or Brazil, and then that can stimulate you. So you can make it happen. It's just you just got to do it.
Yeah, I think that's kind of one of the great things that I keep hearing about the podcast. is just how, particularly when we get these periods of lockdown, that it keeps people connected. It's almost like it's kind of in some ways replaced the the innovation hub or the startup hub, where you can just feel that level of connection and know what's going on, and people can share ideas as well.
Yeah, yeah.
So let's kind of talk a little bit more about Australia and kind of your thoughts on it. Obviously, you've kind of come here from overseas. You talked a little bit about from a CDR perspective, but from I guess fintech as a whole, where do you see Australia kind of playing on a global stage, and how does it compare to, say, the UK?
Yeah, it's got a lot of strengths, but I think it also has some challenges it needs to overcome. So I think some of the strengths, I mean, you've seen like Afterpay take off and the other buy now pay laters. We can totally create new categories with really successful companies that will grow overseas and be successful. But we've also seen situations where we're not funding at the same level that they get in the UK and the US. So some startups can struggle. And if you don't get the funding, you'll know this, Dexter, that if you don't get a big funding round, you might not be able to bring in that talent that can transform your capability in an area. And so if you then just got junior people who have less experience, you might not get there as fast. So I think there's some where I'd like Australia to be, and it's a bit of my background. I've always tried to help companies sort of grow overseas. I'd like a sort of outward focus, like test here, really build a great company here, but also with a mindset that we can prove we can expand overseas. So some of the government initiatives in fostering that, I think, are great, from Austrade and so on. But I think if Australia is to be really leading from the front in fintech, it has to have this mentality of I build good local startups, but I also can export that overseas.
Yeah. And I think that's one of the frustrations that I've got, right, is when you look, if you were to kind of look at the resources that Australia has and what we're actually doing with it. I mean, we can see, that the talent is there. We keep talking about talent shortages, but if you think the lack of resources that we actually have here in Oz, and the access to capital, the challenges around just not having a deep enough talent pool for the latest technologies, I think what we've done so far, to me, is kind of pretty remarkable.
Yeah, absolutely. I mean, and I obviously see recruiting in different areas. I find in Australia there's definitely good talent to be had here. I do think we need to support that by being willing to bring in people from overseas with talents, and I think that sort of ebbs and flows from government support levels. But I think that's critical for a healthy ecosystem. I think we're also starting to see more articles of successful founders reinvesting into the community. If you want to have a successful long-term community here, you need those real successful founders who've made a lot of money to be willing to reinvest, and we see positive signs of that. But that has to keep happening.
So, what can we expect from Clearscore in this next 12 months?
So Clearscore will, in its primary focus, keep making that app better, just building the basics better in that Australian context, so that if you come to the app, you get your free credit report, you get clarity on where you're at as a financial situation, and we just make it easier and easier to save, whether it's $1,000 on your mortgage or $20 on your credit card. And that's a lot of that sort of seems almost behind the scenes rather than like big product releases in the press, but it's making the technology, the hookups with the banks through APIs to other ways, just much cleaner. So I think that's the core, that we'll just keep on just trying to be the best at what we do in the core. Yeah, and I think that has to be 80% of any startup's focus, is just do what you do really well and keep focusing on that. I think there are some exciting things that we're starting to see in the UK, where we've tested new products as well, and I really hope that when those be successful, we'll bring those across to Australia as well.
Yeah, and if anybody out there is listening and they're kind of interested in potentially joining Clearscore, what's the best way to get in touch?
Yeah, so I think there's always an opportunity to reach out to me direct. I love the speaking to new people and hearing their backgrounds, even if we don't have a role right now. I think, like I said before, that creativity comes from meeting a diversity of people. So it's always interesting to hear from people. I think if they're interested in just reading more about the company, going to clearscore.com gives you a good sense of what we're at, or download the app. I think I always encourage people when they're looking to apply for companies is try and use it as a user first and get some feedback. That's a great entry point.
Yeah, it is. Look, I think it's it's one of the things that we look at when we're assessing people is, have they actually done that? One, I think it demonstrates, what's that person's, everybody says they're inquisitive, right? But if you haven't even downloaded the app of a business that you're thinking about going to work for, kind of suggests to me that maybe you're not as inquisitive as you think you are.
Absolutely.
Well, Stephen, it's been great to chat with you. Thanks so much for coming on the show. And look, congrats to everybody on the raise. Great news. And we'd love to have you back on at some point.
Thanks, Dexter. Great to chat.
Cheers. Thanks for listening. If you enjoyed today's show, please consider leaving us a review so we can bring you more great guests like Stephen and help more fintech fans like you discover the show. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We'll help you launch, scale, and innovate by delivering world-class talent. And you can find out more at tier1people.com. Until the next episode, stay safe